Hi guys, welcome back. Okay, let's update a little market first and then we can talk about Pinterest. How about that? Because I have some comments asking me about Pinterest. It has been dropping a lot. Now let's go over the market first. Nasdaq has officially broke through the 10-day moving average but got supported by this gap up. If I look at the 5-minute chart, it got supported by 13,750. And if this support does not hold well, then the next one would be this gap up, which was around the previous resistance level between 13,600 to 13,550, which is between 13580 to the previous resistance of 13,600. Okay? Now, I haven't updated Nasdaq for a while because our portfolio is completely detached from the Nasdaq ever since the beginning of April, as I showed yesterday. Now, yesterday I used the PGJ China ETF to analyze how the Chinese stocks are doing compared to Nasdaq. And I said that right now is still above the support of 61.5. It's trying to break this support. I hope it doesn't break, but for now, because when the support is being challenged quite many times, it might eventually break through. So for now, it's not looking good. I saw a comment yesterday saying the whole world's market is red except the Asian market. And it's true. The Hang Seng Index is going well while being rejected by the 60-day moving average, but it's been the 4th time it's trying to break through this, so it looks like it might eventually break through. But right now the weaker side is the US market, especially the small caps. So this week is the opposite of last week. The Asian market, the Chinese stocks are doing better overall. If you compare to more of a bloodbath selling off in some of the small caps in the US, the Russell 2000 has officially broke the support of 219 today and continue reaching lower right now. So for now, the next support is here at 213. Okay, so the best case scenario is for it to get supported and move within this range, consolidate before breaking it through eventually. Let's see. So right now, a lot of us might feel that the correction is not over yet, and yet we are in another correction. I got a lot of questions asking me, we haven't benefited at all with this run-up of Nasdaq, and now it needs to get into correction again. So does that mean our small caps would get into another bloodbath? Because on the US side today, the small caps are crushed even more severely. For example, Skillz, another 11% today after the fall of yesterday and the day before. And how many people thought that was the bottom already? And here again, especially you look at on this day when it was releasing new shares to raise funds. Look at the volume here. How many people bought the dip, including retail investors and institutions? And right now, they are all trapped above. You thought that was the dip, but it turns out to be the top of the mountain still. I remember on that day, we also bought the dip here, and I suggested to take profit the next day, or at least take some profit. And then later on this day, when it was 22, I said I would change my Skillz shares to WIMI because WIMI was dropping like a rock to around 6. But at that time, it looked like it had reached the support as well. You see? That was the support before the whole run up, right? But yet, it can keep going down every day. Let's look at open. Wow. Another 5% today after so much selling every day already. This is hard to watch even though I don't own this stock right now. Near the end of the market, it dropped to 15.8, which was near another 10% drop after all these days of selling off. If you remember, I swing traded open a few times. I actually took profit from this 3 times already, but right now we are in spring, getting into summer, so we're getting into the high season of real estate. So more people would buy and sell houses compared to the low season in winter. And right now the interest rate is low, money printing, so money are moving also in the real estate. So I think it might might not be a bad idea to revisit it, especially if it can get down to the range of, let's say, the support after the gap up. So it was between 13 to 15. That was a gap up above. So let's see if that support can hold. But back then, who would have thought that open can dip back to 15 range? Even if ARK Invest just keeps buying open. You see on April 13, Cathie Wood's ARK adds another 600,000 shares of open. Interesting. DDD had a little bit bounce back up because Nano Dimension, also 3D printing company, had a little rebound today. Comment asking me yesterday, how come Nano Dimension holding 1.5 billion of cash can be worth only 1.6 billion? And right now, that's how crazy the market is. It's losing the sanity, not making any sense. This is like paying your money to buy cash. How it doesn't make sense, okay? But at least it bounced back off nicely. In the morning, it was 15%. But for it to leave a hammer line like this, it means just too many people are selling. Too much selling pressure. Lots of people bought the dip here. Whenever there is a little bit rebound, people just want to sell. Sell, sell, sell. That's why usually after a hard fall like this, it's quite hard to recover because whenever there is a little rebound, people want to sell. But so far, this is what the market has been doing. One day up, one day down, one day up, down, green, red, green, red. If it stay all flat, most retail investors would just get bored, okay, can handle it, or just not look at it. And even sometimes, if it just fall a little bit every day, slowly drop a little bit every day, retail investors can still somewhat handle it. Just worst case scenario, just close the app, okay? But after a while, suddenly gives you a hard drop of more than 10%. That is hard to take for most retail investors, and that is probably the time a lot of people can suddenly lose it. So in the morning, that's what I sent out to the Discord. I said it's getting more clear because what happened with the margin call at the end of March really inspired the Wall Street because the margin level was historical high. So they see golden opportunity to short stocks. And when you want to short the stocks, you need to find the easy target. The easy targets would be the small, medium caps, especially the small caps that were popular before and had grown a lot. And that would be what the most retail investors own heavily. And once more and more people get margin call and they are forced to sell out, then it can cost more of the diving. And from this, they can just make huge profit like this, shorting them one by one. So on one side, keep pulling up the index, make it look like we are in a bull market, everything is fine. And on the other hand, just keep shorting the stocks. So retail investors keep seeing the market going up and their portfolio going down and keep building up the anxiety, making people lose it. That is what they see, the golden opportunity to short small stocks like this and make huge profit. On the other hand, Wall Street had been making money for decades by not being transparent. You know, they have those dinners and they plan out the next move. The key for them to make money is not being transparent. And here comes ARK Invest, who is trying to make everything transparent for retail investors, showing their research report, showing their next move, pointing where the next trend would be. So this is kind of like challenging Wall Street's behavior. And right now, they are attacking ARK Invest by attacking a lot of the ARK-related small caps company. And that happened to be also what most retail investors follow. So again, easy target, combining with the margin accident and what the SEC is doing with a lot of specs. So that's why all the ARK Invest related stocks like Open, Skillz, and then Butterfly, all of this strongly supported by ARK Invest and happened to be previously SPAC. Right now the SEC is saying how the SPACs went public too easily and they need to check more so the Wall Street can again take more of the opportunity of this. SPACs, ARK related, small caps, retail investors love this kind of stocks would be the easy target to short. Actually also Tattoo Chef, a lot of people don't think it can drop so hard because it's got healthy balance sheets, it's got good fundamentals, products selling well, right? But no, it can still be attacked like this. This is almost like a movie to watch, just like the 2.0 version of the Wall Street bets that happened during the end of January. Someone should make this series of movies. Now, I said for mini sell, a good point to open position would be at the support of 23.8. And today it actually reached this 23.8, but it doesn't seem like it has stopped yet because it broke through the 20 and 30-day moving average. So it would be more safe to see if it continued to dip further. The stronger support is here around 21.3. Alibaba also dipped a little bit, but I still think the value is good. So I think as of right now, I want to make my portfolio more stabilized. I probably have to trim some of the high risk and get more of the stabilized big tech like Alibaba and Baidu and Xiaomi. So Baba has reached the price again that I think is attractive, around 221 to 225. It's already not far away from it. And Baidu as well. 190 to 200 is good, I think. But today it has reached the lowest of 204, which was before the run up. It's not bad, but we'll see. Now, Xiaomi had grown quite well recent few days in the Hong Kong market, and last night it grew 0.75%, got rejected by the 60-day moving average. So it might have a little pullback or consolidation first, backtesting some support. But that would for me be a good buying opportunity because I've sold Xiaomi in January not knowing how the case would go, but now it seems like they have a big possibility to win the court case. I think it might be a good time to add in again, especially they have the big plans coming up. And that would be another good big tech I can add to balance my portfolio to make it more stabilized. So I was asked to talk about Pinterest. This happened to be one of the companies I really like, but recently has dropped quite a bit. So is that a good buying opportunity? Let's see. The good sign is that right now it has reached the support of this trend. So it's still on an uptrend, but the downside is I'm not quite confident on this now because if we zoom out, we really can see the parabolic move since last year. So this is a company I like a lot. I think everybody would know what Pinterest is about. It is a social media app that is growing fast in the recent years, quite centric to special hobbies and clear divide by demographic. So the content is generally higher quality than other social media platforms, more targeted. And right now they're still exploring ways to monetize. For now, their advantage is that they are a much smaller platform than, let's say, Facebook. So that's why they have much more room to grow. Also, their content is more focused, more vertical by the demographic and interest. So that is why their advertisement can potentially generate higher clicking rate, meaning the percentage of viewers clicking on the ad. So that would get a lot of advertisers interested. They're also very good at content about DIY, home improvement, and food and smoothie, etc. And recently they're trying to explore ways to do in-apps shopping. So from a social media transferring to also an online shopping platform, just like what Facebook is trying to do since last year. But for this, I think even Facebook is trying to explore the way to do it well because it's not really that easy, as it would be a big step forward and not specifically the original purpose of why people came to this platform. It's quite difficult to build a shopping habit on social media app. Just like in China, Tencent have been trying years already to build their shopping platform or to challenge Alibaba's position on e-commerce, but it's very, very difficult because most people still draw a clear distinction from social media to e-commerce. So this would be quite a challenge for Pinterest. But if they succeed, that would be a much bigger increase of revenue. I like Pinterest a lot because my company use it a lot, especially the designers looking for inspiration and ideas. It is full of creativity, ideas, and also sometimes quite addictive. So it's engaging for users. So the content is overall higher quality and engaging. So I actually bought in Pinterest back in the beginning of April at the price of 15. because I thought during the pandemic, everybody is locked down at home and they would have a lot of time to do home improvement, DIY, and learn cooking. So a lot of handcraft ideas and home decor ideas. So I thought it would help Pinterest boost their business because much more people would use the app and for a longer time. So I thought they can really benefit a lot by the pandemic last year. And you see, both earning, they had a huge jump last year because they really had improved a lot of the users at a very fast speed for these quarters last year. And also, especially international users were growing quite fast. Well, I was very happy about the growth of Pinterest, but at the same time, it was a run-up of 300 to 400% overall. So I was afraid the business could not catch up the growth after the pandemic, after the economy reopened. So I ended up selling it in January at the 70s. So it has been dropping for a few days already. And the reason was because there was the company called Cleveland Research that expressed their concern about Pinterest. Similar with what I think personally, the fact that they may not catch up their growth in the year of 2021. But I think this is somewhat expected. So the fact that they use this reason to do a wash sale, it somehow doesn't make sense to me. Because people should have known already that the growth can slow down after the pandemic. At the same time, their Q1 earnings would be reported on April 27, so next Tuesday. And the Q1 earnings shouldn't be that bad because there's still a lot of stay at home. But be careful of the good earnings already being digested and there will be some sell the news action. For now, I'm not looking into buying the dip of Pinterest yet because after a big run up like this, I'm not convinced that they can continue to outperform that much of a run-up with the actual revenue unless they can prove they can keep up with the same pace of growing just like during the pandemic, and also prove that they can monetize by being also a shopping platform. That would be another revenue stream. That might make the share price grow again. But for now, they still have to prove a lot of things. With that said, I still think Pinterest is a good company. It has good potential because of the good quality content and engagement with viewers. So let's see if they can explore more ways of revenue. And for now, I would take a break and might revisit it after maybe 6 to 12 months of resting for the share price and see where it's at that time. Okay, now I hope you have enjoyed this video, and please give me a big like and write me a great comment, and I'll see you in my next video. That's it guys, hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.